Let's have a look at the price of oil here. WTI, West Texas Intermediate, trading near $78 a barrel, rallying to its highest level in 5 months. This as there's a new wave of U.S. sanctions against Russia's energy industry. That's putting some pressure on global supplies. Our next guest is also keeping an eye on Donald Trump's upcoming administration, saying it could be bullish for oil, including Canadian oil. Randy Ollenberger is Managing Director of Oil and Gas Equity Research at BMO Capital Markets. Good to see you again, Randy.
Pleasure.
So the U.S. administration, currently still under Mr. Biden, of course, President Biden, they've brought in some more sanctions against Russia. Are they stronger than perhaps expected or not necessarily?
Well, they appear to be stronger because they're taking I think, a more vigilant approach to tracking tankers. And so that's really going to be something that could have a near-term impact as people figure out how to get around those sanctions, particularly in China and India. So I think that's why the market is responding right now. We're seeing a very steeply backwardated curve. So the back end of the curve hasn't moved at all. So really, this just seems to be a very short-term concern.
Right. So let's stick with that. So backwardization, where you've got the shorter-term prices higher than longer-term prices. So we're not seeing further out the curve those prices rise. Why do you think that's happening?
Yeah, I think there's still a fundamental belief that the market is going to be oversupplied. So, what that curve reflects is a view that non-OPEC oil supply growth is going to continue to outpace tepid demand growth and result in, some downward pressure on prices longer term. We don't necessarily share that view. We think, in fact, as you mentioned, Trump could be positive for oil. We think it is going to result in better economic growth in the United States. That should be better oil demand. And I think the other thing to keep in mind here is, Biden has tightened the sanctions on Russia, and that's having an impact today. Trump is likely to tighten the sanctions on Iran, and that could have an even bigger impact if that takes another 1.5 million barrels a day of oil off the market.
Right. Could you expand on that? And do you expect President Trump to put sanctions on Iran, and what sort of impact would that mean on the global supply?
Sure. So the sanctions that were in place last time Trump was in office are still in place. They've just largely been ignored. And so what that's allowed is Iranian production to grow from, 2.2 million barrels a day to 3.4 million barrels a day. And all of that has gone into the export market. Those sanctions are still in place. They just need to be enforced. And so Trump has already mused about enforcing those sanctions. And if he does, we believe there will be less oil from Iran on the market. The same is true for Venezuela, where Venezuelan exports to the United States have crept up to 400,000 barrels a day from zero. So tighter sanctions on both of those countries, or just enforcing the existing sanctions, could really result in less oil on the market. And again, that could be positive for oil prices.
Now, still with President-elect Trump, among the things he's promising is to unleash energy. Do you think producers would actually comply if there was sort of a request, a very heavy suggestion to produce more?
Well, I think less regulatory red tape, that always helps. But I think the reality is, if you're thinking about shale development in the United States, the primary driver of that is going to be the oil price. So if the oil price is better under a Trump administration, we could certainly see higher levels of activity. But, if the oil price stays more or less in the $70 range, we don't think you're going to see much of an uptick in drilling activity. So we really wouldn't expect to see much more supply out of the United States on the market. And the rate of growth is really slowing in the United States. It is approaching plateau. We've heard companies like Chevron talk about their expectation that they're going to reach plateau production within the next year or two. And so we're not expecting anywhere near as much growth in the Permian, for example, over the next several years as we saw, for example, over the last 5 years.
And then how could Trump policies maybe help the Canadian oil sector? Flesh that out for us if you could.
Sure. So again, at a high level, to the extent Trump is positive for oil prices, that's obviously beneficial for the Canadian oil and gas sector. But he's also talked about the possibility of resurrecting some of these pipeline expansion projects. So Keystone XL, for example. Now, whether that takes the form of Keystone XL or whether that takes the form of an expansion of the Enbridge system, which Premier Smith is talking to Enbridge about, and she announced last week. So, to the extent we have a friendlier government in Washington that wants more Canadian oil, that would be positive because it would allow the sector to grow. The sector is certainly capable of adding significant amounts of production if the infrastructure is there.
All right, Randy, what about a couple of names in the Canadian oil sector that would directly benefit?
So, I mean, right now, what we like, we certainly continue to like Suncor. They've been doing very well in terms of improving their operations. The stock's been responding well. They just came out and said basically fourth quarter was much better than expected. They hit a bunch of records. So we continue to believe that there's still more room with that one. Canadian Natural Resources is another big oil sands player that we like. It has underperformed its peers, but still delivering stellar performance, fantastic results. And if you look at the growth potential, so if we were to go down a path where, the sector could start resurrecting some of these projects that they've, put on hold, Canadian Natural Resources actually has the largest portfolio of potential growth projects in the oil sands business.
All right, very good. Thanks as always, Randy. We'll talk to you soon.
Thanks.
Randy Ollenberger, Managing Director of Oil and Gas Equity Research at BMO Capital Markets.